So my name is Fan. I'm the chair of the BCS Bedford branch, and it's a delight to have friends from all over the world to join us tonight. And it is a really interesting and exciting topic, and we're delighted that we have James, who is a practitioner right in the middle of it, to share his experience and probably allow us to take on questions and get to tap into his greater knowledge later on in the Q&A. So the event is organized by the BCS Bedford branch. So for those of you who are members, of course, you know that BCS is the chartered body for IT practitioners, and we represent something like 70,000 members all around the world, with a major core in the UK, and tons of things that we do to make IT good for society. As the local branch, we base ourselves around the Bedford area, but not just only Bedford. So in the days that maybe we're returning to soon, according to Boris, we tend to have our monthly meeting in the Bedford Centre Hotel. So on the picture, the cookies and coffee would be the typical things that we can enjoy before we have the meeting formally starting. But for now, it's picture now. We don't know when we can actually have face-to-face meeting, but we look forward to being able to have the face-to-face meeting sometime soon, so we can consume some real coffee and real biscuits. Virtual biscuits aren't any very good, I have to say. But then as we move on, we probably will try to see how we can use technology so that we can also connect to the rest of the world. So for tonight, we're really pleased to have James here. He's going to tell us about the FinTech. Then that's something that I'm looking forward to learn from. At the end of it, we have a bit of a Q&A session, and around about 8:15 for people who haven't had dinner, feel free to go and grab your dinner. But for those who want to stay in and have a chat, we'll keep the sessions on as long as people who are staying with us. The local branch committee have a number of colleagues who are helping us out. So I'm here. Severio, our secretary, who organized tonight, is also here. John, who is our colleague looking after events, is also here. I'm just scanning down. There are probably other executive members. Oh, David is here already on the list. Andrew is here, and so on. So we have a number of folks who are helping in regular, but if you feel you'll be able to contribute to us organizing events, etc., then do make contact, because I think it's better to have more hands, but also being able to network and get to know and learn about each other's wider scope of business. For the program, this is the program of the year that we've been running. So we're running into our May event. Of the previous event, the majority of them are recorded, but some of them we don't leave it on the open YouTube. So if you are interested in those topics, talk to us, and we probably be able to send you the specific link to those recordings. And we have James here on our May talk. In June, we are planning to have something around web design now. Of course, by that time, we are competing with the pubs who are fully opened. So we'll see if and how many people we'll have for that meeting. Beyond that, in July, George, who is one of our colleagues, who's not here at the moment, he's building a high-performance computer in Cranfield University for the Digital Aviation Initiative. It is called Hilda. It seems to be now starting to work, and in the July meeting, it is the opportunity for him to share the experience of building it and how to overcome many things to make it. What he's telling me is the 5th fastest computer in the UK. So that could be a fun thing to learn from. And that's coming near to the end of our program year. Folks who know us know that we run an annual school competition for coding. So July the 7th is the prize presentation date. That's something we are planning for. And now that with Boris' announcement tonight, I'll be trying to tie up with our friends in the Northampton branch and the Museum of Computing. Every year, except last year where we cannot go, we've been organizing a family fun day. So members as well as their family, and we encourage the whole family with younger children as well, and enjoy a day of organized activity in the museum, the National, get the name correct, the National Museum of Computing in Bletchley Park. And it is a heavily subsidized event. So I'm going to tie together with those stakeholders and see, under the new rules, can we do it and how we can best do it? And if the weather is getting better, it will be a first time we both be able to find some branch budget from somewhere. Maybe we can even stage a garden party. So those are the things to look forward to in the summer. And that's the kind of things that we hope we'll be able to share with you as we go along. I mentioned the Cyber Challenge. This is a school competition that we've been running since 2013 in partnership with the schools community around Central Bedfordshire, Bedfordborough, Luton, Milton Keynes, a little bit of Northamptonshire. It's mainly to encourage young people to have that opportunity to get active on their computing and get to find more fun and interact with it. Check our website. The submission deadline is in June. It's a really good thing to encourage if you have children in school or grandchildren in school, to encourage their teachers and head teachers to get more into this topic. So if you have a chance to spread the news, that would be really, really lovely. And we want to be able to build our future generation to tackle all the clever things that James say we need to do. Right, that's enough of the plug. And then what I am going to do now is to hand over to James. So he's going to share his great knowledge with us. Saverio is going to monitor the Q&A. So if you have questions on the spot, then the easier thing for you to do is to put them in the chat, and that's Saverio will organize it with John and with James. So we may tackle some during the talk, and we may save some for after the talk. So without further ado, I'll pass over to James, and I'm sure James will introduce himself. He's a great friend. Actually, James and I both share in the governing board of our local lower school. So it's a good thing to have folks around. Now, James, I'm going to stop my share so you can take over.
Okay. No, thank you very much, Fan. No, I'm really pleased to be here, and yes. Okay, so exciting times for UK FinTech. Well, okay. So what are we going to do? What are we going to do tonight? Well, I mentioned in the introduction to this talk, which is on the flyer, I mentioned the Kalifa review. Now, the Kalifa review, named after its principal author, Ron Kalifa, is OBE, was commissioned by the government last year, shortly after the 2020 budget, and it was really there to set the plan and the vision for FinTech in the UK. Now, I'm going to mention it once, but not really mention it again. And the reason for that is I'm not really referring to the recommendations of the report. I am referring to some of the work that was done for the report by Deloitte. And what they did is they performed a sort of a grassroots analysis of FinTech in the UK. And one of the really useful things that they did for this this review is they identified these 8 subfields, which are here within the UK, and they looked at about 2,500 companies. And the great thing about that is that you've got an authority almost saying, well, FinTech is this. This is FinTech. And so you don't have a sort of it's like, who is me, a nobody like me, to say, well, FinTech is this. So I can refer to these categories that have been put forward. So, right, well, okay, what what is FinTech? Well, I think the interesting thing is that the first thing we have to be, to consider is that it's not just about tech, and in fact, I mean, the Wikipedia definition says that it's technology and innovation that aims to compete with traditional financial methods in the delivery of financial services. I've put lots of links through this presentation. I'm not going to click on them throughout because I'm trying to sort of look at the chat and look at, and I think doing too many windows at once is not going to work. But the slides are going to be available, and so I've stuffed the presentation with links, and you can follow them up in your own time. So, but the second part of the definition is the useful bit, I think, because it's to compete with traditional financial methods, and from that you get a word that you often hear in the context of FinTech discussions, which is disruption. Okay, so as much to do with technology, FinTech is also about disruption, which I suppose is just a fashionable way of saying competing with traditional methods. All right, so. With that in mind, what I'm going to do for this talk is we've got some questions that we're going to ask of each one of these fields, these subfields of FinTech, so we can better understand what they are. All right, so question one is, what is the traditional practice? The traditional practice that is being disrupted. Two, what circumstances have arisen to allow for the disruption? Okay. So why is it now? Why are they now a thing? Three is to give an example or one or two examples of a successful UK disruptor, and I'm also going to throw in some relevant IT. I'm going to refer to some types of IT, types of tech, maybe some frameworks that are kind of are used in this space. Right. So I've kind of said this already. It was just really outlining Kalifa review. What haven't I said? Well, I haven't said that. Yes, there was 17 recommendations across these 5 priority areas: skills and talent, investment, international policy and regulation, and national connectivity. Now, I suppose my own sense is that it's going to be, it is exciting for technologists or people who who either working in it or working or thinking of working in it, because the government will be very, very keen to make UK FinTech work. There's been a series of successes actually, and as we'll see tonight, one of the reasons for these successes is some of the regulatory changes that have happened in the UK following the last financial crash, and obviously post Brexit, the government will be and will be very, very keen to make sure we continue to stand out. So yeah, exciting. Oh dear, my cat's going to say hello. You stay there. Right. So these are the subfields. You've got banking, you've got RegTech, InsurTech, lending, business banking, payments, quote aggregators, and WealthTech. Okay. Now, so what we're going to do, as I said, we're going to look at each one of these, and but really, where the questions and where our discussion happens, that's kind of like up to you. I'm going to say I'm going to keep an eye on the chat, and so somehow. Where's the chat gone? Oh, there it is. And so if there are, okay, excuse me, I am just going to get rid of the cat. Just go away. You would not believe it. I've been working on these slides this afternoon, and I lost count. She thought it was a game, just standing on the keyboard. Right, where was I? Oh yes. So I'll watch out for the chat, and we might have a half time. We might go through some of the the first four, have a half time, and have a discussion, and then do the rest. But basically, the format of the rest of this talk is pretty much, for each one we're going to pose these 4 questions against each one of these subfields. So banking, right? So the quote from the Deloitte work for the Kalifa review is that this refers to core banking products, including personal current accounts, savings, and mortgages. It covered 13% of the 2,500 companies that were in this analysis. Okay, so question 1, right? The traditional practice. Now, I'm emphasizing that this is pre-2008. So really, the traditional view was that in the traditional world there was the big 4, Lloyd's, Barclays, HSBC, NatWest, and they dominated financial services in the UK with very little competition. I think it was about 2010 that Metro Bank, well, it could be in 2012, but it's one of those two, that got its banking license. But that was like the first new banking license the UK given in 100 years. So they had a fairly stable a dominance. And there was also very little obvious gap between, sort of split between what was known as retail banking, which is for individuals and small businesses, and investment banking. So these services could both be under the same brand. However, post-crash, things changed. There's a lot of bad feeling about the big bad banks, and there was also a number of issues which you'll remember with PPI claims and other bad feeling about the quality of consumer credit. And so anyway, you had post. Then you had about 2012, which you had the introduction of the FCA, the Financial Conduct Authority, that came out in the Financial Services Act of 2012, and well, the government, the FCA, wants to protect consumers. You could say clip the wings of some of the big 4, and the best way to do that is to increase competition. And so over the next decade, the last decade, you had many more. Well, the first thing was many more banks were appearing. It became much easier to get a banking license, and you had a lot of these challenger banks, which were new banks appearing. A couple of other things was. I'm sure many people have experienced this. In 2013, there was the current account switch service, which meant that it's really easy for you to switch your current account to another into another bank. That wasn't it was a real pain before. You would have to, it'd be your responsibility to sort out your standing orders and direct debits, but that makes it the responsibility of the banks. And also, and open banking, which is in 2018. And that's particularly interesting from a technology perspective, but I'll talk about that in a bit more in a second. Okay, so an example. Well, I've kind of chosen a few different, challenger banks that are doing their thing, but I've chosen Atom Bank. Now, it was ranked 3rd in in Bauhurst's list of 50 top FinTech UK startups. I should say I've referred to this this listing. I've used it quite a lot in the research today, because that I was wanting to ensure that the companies I choose, they're UK companies, and they're not just talking the talk, they're walking the walk as well. So these all these companies that will feature in this list, I should say. So being challenger banks, you can do things in that are different to how it was done before. And the biggest difference, of course, that Atom Bank has is that it's completely digital. It has no branches, and but it can use those cost savings to offer savings and mortgages with not quite the same with reduced charges, and you can start being competitive. They've raised almost £500 million as of January 21. So what kind of stuff, what's tech is go? Okay, so the open banking, it's the Open Banking Implementation Entity, OBIE. Now, for those people who those of you who do web services or anything like that, you look at this and it will immediately be familiar. You'll go, oh, this is because it's basically it's all it's just it's all. You look at that and go, well, that's all just well-documented APIs, and that's what they are. They lay down the specifications for how how the banks. Okay. Well, so what is? I think I may have skipped a step. So what is it? Open banking. It's the big thing is that it allows you as a customer of a bank to allow third-party services access to the information, your account details, which which it then enables a huge market for these products, which can be software agents, if you like, on your behalf, or in the case of Atom Bank, it allows Atom Bank to be a marketplace. So you don't have to be just subservient to whatever functions are in your sort of online banking. You can plug in services provided by TPPs, third-party providers. So open banking, really big thing. Obviously, another big bit of relevant tech is cloud services. And I've made the point, so you don't need a London skyscraper to be a bank. You don't need your own data center either. You can compete quite happily with people who do have data centers, because the plumbing can be with AWS or DigitalOcean or someone else. Okay, no questions on the chat. Right. Okay, so that's banking. So let's look at the next one. RegTech. Okay, so what's RegTech? Well, company. The quote from the Deloitte stuff is that companies with activities and technology focus on reimagining and streamlining risk, credit scoring, and compliance software. Now, okay, so let's look at some examples, and it's 10% of the 2,500 sample. Right. Okay, so I should point out that so straight away that RegTech unlike a lot of the other subfields that we are going to look at, is not tapping in to directly to the revenue streams, not tapping into directly to, for example, the revenue streams that banks would, their revenue streams. The challenger banks were tapping into, the customers and small businesses, and we see other we'll see other kinds of fintechs that are tapping into the other revenue streams that of other services provided by the bank. RegTech is a kind of it's really a banking problem, but we've got companies that are they're providing a cost-saving service for the banks. Okay, let me try and explain this. So, okay, right, there are certain things banks need to do, and which has really, since post-crash, with increased fines, it becomes a real headache. A couple of these things, these acronyms that fly around, is KYC, which is Know Your Customer, and AML, Anti-Money Laundering. There's also risk modeling and stress testing. Now, the thing is, these things, these big things, and if you get them wrong, they're very, very expensive. They would all be done by banks, by the compliance departments. I think I read somewhere that for many years it was just the compliance departments in banks where the numbers were growing, and in other departments they were all reducing. So really, again, it's another post because of the crash, because of more regulatory compliance. It's expensive and a massive headache for banks. So banks become more willing to outsource this work for this, especially to companies to offer banks the ability to automate this work using AI and other cool technologies. So, successful example of disruption. Well, Quantexa. Okay, that's a UK company. Now, I believe they were originally, I think they more sort of came from more cybersecurity, but they was really associated with was sort of network analytics, because I think they've been going for about 20 years. Now, they've got now a machine learning platform called Contextual Decision and Intelligence. And this is doing very well, and it offers solutions to spot fraud across the whole spectrum of KYC and AML. And it's raised quite a bit of money, 71 million pounds. Okay, so what kind of stuff are they doing? Well, right, yeah, deep learning. So it's the type of machine learning that has really become very successful, over the last decade. The theory is old, but with the rise of increased processing power and the development of open source frameworks and tools, it's deep learning is solving a lot of the problems you hear about in the press when it comes to AI, and and it fits this kind of problem because there's lots of data, and so well, the particular context is that Quantexa of use is building on their network stuff that they did with I think cybersecurity, and they've got a very clever deep learning framework, which is I think their biggest customer. off the top of my head is HSBC. Now, the link I've put in here for those is I think this is still one of the best and most popular books for getting into. In fact, I appreciate you don't have the slide, so I'm just going to click on this and remind myself. So this is Hands-on Machine Learning with Scikit-learn, Keras, and TensorFlow. It's on its second edition now, and for those of you who are wanting to get into machine learning, know a bit of Python, it's great. It's published by O'Reilly, and yeah, it's generally recognized as the chap who wrote it. He works for Google, so he would have been part of the TensorFlow team. And yeah, it's very good. So I'll say that again. It's Hands-on Machine Learning with Scikit-learn, Keras, and TensorFlow, second edition, published by Aurélien Géron, and that's from O'Reilly. Right. Yes, Quantex, I believe, is this is a question I've just seen on chat. The chat is: are you aware whether the Quantex machine learning platform is available for use by financial institutions outside the UK? Yes, I think they're one of the big reasons they've had a lot of sort of written about them in the press is that they're hitting a global audience. Yeah, no, so the question I've seen is one of the problems with deep learning is that the samples used can easily give rise to extremely biased outputs. How do they stop this happening? And no, we can't have our money suddenly disappearing. There is, I say, all I can remember after reading the Quantexta stuff today was that they did mention that, and that the problem of bias, and they've just made a big thing about saying, we've built it on top of all the good stuff we learned from our doing our network analytics. We could, not many of these, a lot of the firms, most firms don't say exactly how things work, and you're kind of guessing. But and so, hey, I don't know how much of deep learning, machine learning is in it, or whether it's just, it is just building on and using just what they did before. But hey, that's what they say they're doing, and they've got some big customers. Right now, so InsureTech. After this one, no, we'll have a half time, but so right, yeah, companies selling what is companies selling insurance digitally or introducing new business models or reinsurance specific software. 6% of the 2,500 sample. Right. Okay. I don't work in insurance. This is, my layman's understanding of how things kind of used to be. If anyone is working insurance, they can pick up and explain it much better than I can. But my understanding is that you have, insurance companies who have broad actuarial tables assigning policy seekers, us, to risk categories. But then these groups, categories are adjusted slightly so that policies are profitable for the insurer. Now, the problem with this, though, is it's not as personalized as it could be. Some people pay more than they need given their particular circumstances. We don't fit that, that general category. So what other circumstances has changed? Well, there is more data now. Okay, so can we solve this problem by using more individualized data? What some people use is GPS tracking of cars, activity tracking from wristwatches. Now, the particular one, the form, the GPS tracking of cars, is used by Zego. Now, Zego, they ensure, for example, Uber drivers, I think Deliveroo drivers, taxi drivers, and so they're catering to to people who are interested in well, it's a a very fine grain kind of policy, and actually they offer it minute by minute insurance, or they can do annual cover, and the pricing is based on the usage data from the vehicles. So I would think that, that they've partnered with Deliveroo, Uber Eats, and Just Eat, and among others, and so partners directly with their systems. And they say that this is, this is a better, a better policy for the, for the individual drivers, and can give them a more accurate, well, reflection on who they are. Okay, and now, okay, relevant tech. Well, clearly I've mentioned, there's web services here, and so much of this, what we see today is yes, I mean, machine learning features quite a lot, but also it's the, it's APIs, it's computers talking to each other on the web, and Zego, for example, plug in directly to the systems of Deliveroo, Uber Eats, and Just Eat to get that GPS data. As I said, the companies I've chosen were from this top 50 UK fintechs. So I have also read that there are companies. So you hear that if you can send your insurance company your your Fitbit data, you share that with them, then that can better give you a better kind of policy. However, those an example of a company who was doing that wasn't in the list I was referring to. So if anyone knows a company that does that, because you've read about, then please, if you could throw it in the chat, I would be interested. Okay, last one before we have a little break, and that is that's lending, right? And these companies focus on innovating credit from commercial to alternative and specialist lenders or platforms, facilitating P2P, peer-to-peer. So there's this, you hear this, you just hear it. If you go online, this could just be summed up as alternative lending, right? So if this captures a lot of what is on this slide. 13% of the 2,500 sample. Traditional practice. Well, traditionally, we individuals and SMEs can only secure loans from retail banks, and we are underserved by the traditional loan investors. So when I say loan investors, the people who are interested in wouldn't be it'll become under the term bonds. It'll be bond trading, and a bond is kind of just a big boy version of a loan. There is interest, and but that's the only thing really that that would be in the kind of the portfolio of investors. Okay, so what circumstances have changed? Well, SMEs and individuals, were looking elsewhere. Again, post crash, and certainly in the last few years, it's harder for some individuals to get loans through the traditional routes, but because we're a connected society, platforms pop up offering retail investors, as in the retail investor. The retail investors, retail as opposed to institutional. Retail is you and me, an individual investor. The institutional is the professional investor who manages someone else's money. So platforms pop up offering retail investors the chance to invest in small loans which are required or sought by small companies, and unsecured consumer loans. Now this kind of peer-to-peer lending has expanded to not just small business lending, but student loans and auto finance too. So a successful example of disruption, Zopa. So a big UK company which is offering retail investors, peer-to-peer investment. And I think what stands out about them is they got their full banking, their license in June 2020. So in addition to they're more regulated. You can maybe arguably trust them a bit more, and they offer investment ISAs and credit cards, but where the things that you're investing in behind these these kind of these investments are kind of are collections of loans from small balance loans of individuals and small companies. Like before, like the challenger banks, they can offer competitive, they can offer features which stand out from the traditional banks. So they advertise and they point out they use soft credit checks, which don't affect an individual's credit score. Web services, cloud, again, open banking. That's all made that possible. Right, okay, so half time, we've done the 4, we've just got the 4 to go. I don't know if there's any questions, or if anyone wants to just shout out, please do. Stop me talking.
Thank you, James. It's fun. Just want to make a point that for friends who want to send in questions, it would be better to send it to the public, everyone, so everybody can see the Q&A.
Yeah.
Some questions that went to James as direct message, so we don't benefit from the same understanding.
Yes, we're all friends here. We can all, yeah.
So James, one of the questions that as I'm hearing what you're saying is that I know friends who are probably trained in a finance career, get into accounting, etc. But there are no programmer. We explained that there's something called API. They were just fall flat. Do you see the same in that skill gap?
Well, as in the skill back going the other way, programmers who don't know their finance. Is that what you're saying?
I mean, the financial people may well be losing their jobs because they don't know how technology is going to automate.
Well, I think okay, so if we're then thinking of those people who work within, I mean, if you're working with one of these exciting challenger banks, you would think that you're kind of a lean, mean fighting machine anyway. I mean, so you're kind of, your job is you're just a you do a useful part of the whole the whole process. But going back to that point about sort of personnel within larger banks have been restructuring, downsizing for many for a number of years now. So I would say if you're in one of the traditional institutions doing one of the traditional practices that is competing with these new fintechs, that's kind of that's problematic. But I think, I mean, if you're talking about finance people who maybe are maybe accountants who work with actually businesses, then obviously they're still part of the they're actually one of the areas that that's going to crop up in next is just for them. So what kind of people were you thinking of? Were you something else I suppose you can think? Were you thinking of maybe students doing a financial a degree who maybe, or sort of a financial course?
Yeah, I think that's that. But I'm thinking about that, maybe say picking up this lending example. Some of these lenders were bank of officers that need to read a case, judge a case, and they will be probably the computing skill is office skill rather than doing complex modeling.
Yeah, well,
or using the Excel to plug into an API to pull data to do their modeling.
Yeah, well, I think those people must have the label of the data scientists, and I think the thing about, even with these challenger banks, even these new fintechs, these there's not loads of them. My company did a little bit of work for one of the biggest US banks, which you would have heard of, and it was surprising how not big their data science team is. So because the thing is, the great thing about these is tech is you can get, if you get something, if you and a or not me, but if they and a sort of a team of super smart people, just three of them can get a little black box that's doing some really clever stuff, that black box then can be put into upscaled. And so you don't need the very many people. I would say it's a problem. I mean, based on my research, I would say the thing they need to worry, if they're so obviously doing something which is a traditional practice and in a traditional institution, and it's competing with one of the new kids on the block. But saying that, you find some of the traditional institutions are to be a bit crass. I mean, sort of some of them are sort of trying to be a bit hip. This is actually not one of the banks. This is actually one of one of the big big hedge funds. Actually, I've met someone there who made a point of saying that they're because they want to be like one of the fintechs. They made sure that they got rid of all the chairs, and they put a pool table there and a table tennis table, and that was it. And they were going to be, and a vending machine, and they didn't have to wear a suit, and that was it. Then this is right. We're like a fintech now.
Oh, okay.
So many big institutions are of course aware of these problems, but obviously some of them are maybe not not fully keeping up with the new kids.
Right. James, Paul has just asked a question. Do you see that?
Yes. Okay, in my experience, decision making is one of these things that appears in a lot of press releases, and it's like you read the press release about, or the marketing about what the AI does, and it sounds like, it sounds like it's running the company. But actually, I mean, machine learning at the end of the day is just graph fitting. It's drawing lines through training data, and so you can do some very clever tech, and obviously it works very well if so it's like look at the machine learning that works. I mean, the image recognition, we're not surprised if you look at the phone and it can unlock you because it knows who you are, or we type something, we can type something into Google and it sort of understands what we want. But that's kind of a very, it's a kind of a go get this. There is a big gap then between then making these decisions and these complex decision making. I think I think it also, because of the regulation, Paul, we'll see a little bit of this in a second when we look at robo advisors, which is basically, that's been going around for a while. It's basically just, it sounds like, someone is, you're just going to say, hey, what do I have to invest in? And it's going to sort of pick up this and pick up that. But really, it's following a very purpose-built, algorithm, portfolio, optimizing a portfolio based on a scripted set of, questions that it's input that you've entered. So yeah, I would say my experience, we don't really have to worry, but it's just annoying that you read the marketing and it sounds like Terminator 2. So the controls, though, I mean so for my in my own field, for instance, for people who are picking stocks professionally, or actively trading, there has to be a long chain of almost documentations to they have to say what the research was, that why they what led them to pick this stock. So there is a lot of, I would say, there is lots of regulation in place, but and the FCA in some ways does cover a lot of it. Oh, and a new question. Sorry, Paul, if I blabbered on a bit. I hope that sort of partially answered it. Stuart's question: how do you envisage the AI scripts being tested if so few actually understand what is technically going on? How do you compare results with traditional test methods? Well, I suppose can you throw in another bit? Which topic, Paul, were you thinking of when you asked that question? Or was it more kind of a general, Stuart, sorry.
Stuart, yeah.
Yeah, Stuart. Please put yourself on speaker if it would be easier. I mean, of one of those topics that we've looked at when you're referring to AI.
Yeah, hi. I wasn't actually trying to look at any particular topic. I was just trying to look at the whole range of topics within this type of environment, because it's all very well people talking about AI modeling and all that kind of stuff that goes on. But I saw somebody was mentioning exam results that were calculated using AI methods. The real problem was that the people who were doing that didn't have a clue of what those AI methods, results and everything actually meant and how they were being used.
Oh, absolutely. And this.
So how do you go to the general public and say you are safe, or do we have another post office type scenario where people get prosecuted because nobody actually understood what was going on?
I suppose all I can really think about is the particular decision. So that sort of decision, the decision making of that. So I'm just going to quickly, for my own reference, just quickly flip back and look at the things we've looked at so far. You've got lending and InsureTech. So decision, yeah, okay. So there's a bit of sort of black box here, of course, and I suppose there always has been in with insurance of and personally, I've I don't know if you've had that conversation with the with the insurer when they've said, okay, well, if the price is this, and you said, well, would it matter if I said it was 9,000 miles a year, not 8,000 miles a year? Because I think, and they go, no, it doesn't work, or it's they just put there quite rightly. I mean, they want to say, well, no, it's not rightly, but it just goes in to an algorithm, a black box, the decision making. Now, I suppose the danger is, it's more dangerous with exam results, of course, because this is kind of actually, I don't know, it's more dangerous. It's a problem, Stuart. It is a problem. There is a brilliant book which I thoroughly recommend called Weapons of Math Destruction, by a very clever lady. Weapons of Math Destruction, and which I would by Kathy O'Neill. So she's a mathematician, but she worked in hedge funds for a while, then I suppose got decided that's not the thing for her, but has basically written a number of articles and more recently this book, and it's very in a very good way sort of identifies this sort of this black box problem and the bias, the inherent bias, and I think whether there was a kind of a nasty, and actually many of the ones that she sort of identifies having was like this nasty bias, which is almost which is built from sort of certain feedback loops and things. It's the kind of example where if you're looking, these series of where you're going to send the police, and the black box says, you send them here, you send them to this district because that's where the crime's always been, and of course it's a vicious circle because then always the police just always focusing there. That's where they pick up stuff which wouldn't have normally been found, or it creates a problem, but with the exam results, I don't know, it just didn't seem like a very good algorithm.
Perhaps, James, I can give you a better example. When I was working, because I'm retired now, I did an awful lot of work with various insurance companies, and in an actuarial tables, for example, which you've got on your slide conveniently, they're notoriously difficult, particularly with things like pensions. And at the end of the day, the people who did, the actuaries who actually did it, could spend months actually checking out that we got the results coming out that they wanted. Now, if you're using AI, and AI can do, say, 10 million calculations where you might have had a couple of hundred, how on earth is anybody going to be able to sort out whether it's actually right, wrong, or indifferent?
Absolutely, yeah. No, this is a problem of of the tech, because it's very much if it's this complex black box, which is it's getting as complex as a living thing's brain. We can't just open up someone's head and work out how that decision was made, and it's exactly the same issue. Well, the only thing I can hope for as someone who's just like you, kind of in this system, is that that everyone, from the marketing people and from the use of the system, know the kind of the power and the limitations and the potential problems of the tool. I say my being kind of an ex-academic, my feeling is always you should try and explain things as clearly and as honestly as you can. As I say, going back to what I was saying earlier, marketing departments sometimes want to put a different view on things, but that's maybe to be my own bias.
I guess without monopolizing this, and I'll just make this comment, the real danger is you could end up with mis-selling again, like you had with PPI, and people actually then wouldn't be able to explain it because they didn't know what the calculations were in the first place.
Quite possibly. Yeah, so I think that's well, you got me interested. I'm going to sort of I'll sort of look into that one, look into that a bit more. But yeah, but this whole, I think it's going to come up. This the problem of the black box is going to come up in all areas where AI is used, and it doesn't have to be a problem. I think you just have to be aware of what it does, and to an extent, kind of what you and you have to mitigate against that best you can.
Oh, okay. Thank you, Stuart.
Cool. Should we have a right,
James? Yeah, I think you need a break as much as anyone else. I don't know what the audience feels a 5-minute or a 10-minute break and reconvene. James,
yeah, I mean, I would say it won't be long. I probably got another 15 minutes to go, but I think breaks are always good. And obviously, I know it was only supposed to be an hour, but I don't know. Can we?
Yeah, we can take a break. We can take a break.
Quick. We'll just take a.
Yeah,
as long as everyone's okay with that, I'm just going to do. We're going to do 4 more topics. And,
okay.
Yeah, so we'll continue.
Do you want to put some background music? Joking.
Wow. No. Yeah, so we can just continue in say 10 past. Just
10. Yeah. Oh, that doesn't give you long. 10 past.
No, 5 minutes. Just,
okay then. All right. Thank
past.
You. Okay, to everyone. Yeah, a 5-minute break.
5-minute break.
Okay. Yep. Thank you. Cheers. There you go. If you leave your slide on there, then people have got something to look at.
Okay, I'll look at was that the one? This is the next one, I think. Yeah, I'll leave that one there.
Okay, leave that. All right, bro.
5. Okay.
Yeah, brilliant.
I'll see you in 5.
Thank you. Yeah, see you in 5.
4 now. Okay, Severio, should we start again?
Yes. Okay, we just got one. Let's have a look who's in the chat. Oh, sorry. Oh, okay. Sorry. That's it. Sorry, it was only to me. Okay, yeah. Let's go.
Cool. Great. Okay. Well, this one they call it business banking, but I suppose what we should have in what I have in my mind when I understand what say they meant by it now is just think of Xero, you know, the accounting software. You know, that's very much what this kind of, you know, that's an example of this category. So it's on you know, accounting software, payroll software, and I suppose this is not that new. So as all these things, I've tried to, as with this, you know, each of these slides, I've tried to identify something maybe is slightly different. But the traditional practice was that, you know, work was done by accountants on desktop accounting software. But I think certainly from my own experience, you know, many accountants have been using web-based software, web-based for a number of years now. This is, you know, and there's SME founders want great oversight and want to reduce costs of accountancy services. More data, more tools for its analysis. So yeah, so now interestingly, there's sort of so Dext, which is formerly a receipt bank. Oh, I think there should receipt banks should be one word, I believe. They're an example of a successful UK company, which they don't advertise, because I know Xero is, you know, sometimes you know, people, you know, it's advertised to you know, the company owners themselves, and you know, you can almost like skip out the accountant, but well, but equally it doesn't have to be, you know, obviously have to be the case, but with Dex, it's advertised, it's saying, hey, this is for accountants, it's going to make your jobs much easier. So and this is the you know, one of those technologies that's been around for many years. I mean, OCR, I see OCR, I think, you know, got this into my head like Windows 95 and things not working and loud noises. But yeah, the OCR has been one of those, I think it's been described as a sort of this, you know, these sort of sleeping giants of you know, of machine learning. In that, quietly behind the scenes, that's been, you know, it's been, by all accounts, been getting much better over the last couple of years. And so what Dext have been very successful in doing is allowing company owners and employees to, you know, throw invoices and, you know, receipts and all kinds of stuff, you know, either on a scanner or you know, on your phone, and this would all be automatically categorized and then synchronized with you know, with the bookkeeping software, so QuickBooks or Xero or whatever. They've raised just over 100 million, and so yeah, so I mean, I must admit, going back to what Stuart's point was, I suppose I'm, because I tend to work with the tech, I'm sort of, when the applications of AI, they're always, you know, I see them a bit more sort of low level and grounded for me, and I must admit, sort of the, you know, the OCR one does seem a little bit, that's kind of what I think often, but you know, as as an example of an application of it. But yeah, so they use, they've really hooked on to the advances in has happened in OCR, and of course they're also using you know, machine learning with their categorization too, and also thrown in there is, you know, like we've seen before, web services, allowing it allowing the interface with other, you know, other software. Yeah, so that's that. Right, payments. Oh yeah, so I've got my little aside here. Yeah, so okay, so with the payments, yeah, so for the, I think with the Kalifa review, the work, this kind of covers, I mean, obviously not PayPal, PayPal's, you know, not a UK company, but checkout.com sum up are examples of disruptive payment initiation and EPOS systems. But what caught my eye when I was doing the research was the companies that are doing work on remittance, which sort of money transfers as gifts. And so I thought I'd just talk a little bit about that. But just to point out this little asterisk to say that the example I'm talking about is just one of the many things that payments covers, but you may be more familiar with some of the others. So the traditional practice of sending money as gifts was that you'd have the person A, and typically in a rich country, takes cash to agent of the transfer firm, which could be a bank or an accredited corner shop, and the money is then transferred to a developing country, and person B goes to another agent of the transfer firm, which could be a bank, shop, or bureau de change, and then withdraws the money in cash. Now, post-crash, and actually no, before that, post 9/11, that became a lot more difficult, and certainly with the rise in fines for to the big players, that many retail banks started to close the accounts of clients who were doing in the remittance transfer business. But obviously this was a real problem for people who wanted to send money to their families to back home. So as we've seen before, but when there is because of digitization, because of the internet, there is a solution came about. And I mean, interestingly, the thing about digitization is that it actually provides the prospects for security, which is not is a problem when you go and taking bag of cash to in one country and taking out a bag of cash at the other. And with digitization, it means there's no agents, no cash pickups, and the other circumstances that change. There's mobile money now. I was aware of mobile money, but it wasn't until I started doing research for this I didn't realize quite such a big thing it is in many countries in the world, where this is for where you have money in a bank, kind of like a wallet, but associated with a SIM card. And this is how many people who don't have a bank account can still participate in our global digital world. And so the success, one of the big successes, the UK success is World Remit. And so it advertised itself as on the sending side, there's no cash involved, but on the receiving side, it can be bank deposit, it can be mobile money, mobile airtime top up. And I must confess, I'm not too sure what that is exactly, and what the difference is between that and mobile money, and or just cash collection. Yeah, it's raised just over 300 million. And actually it's doing very well, because it's clearly it's solving a real need. Now it's heavily regulated, but and it seems to be doing cool stuff. That's left over from the previous slide, so that you can ignore that. But clearly, some of the tech that is involved here is web services, but it's not integration with Deliveroo, Uber Eats, and Just Eat. That was from the previous topic. Really interesting. Right. Okay. Quote aggregators. okay, so many of you would have all know, the Go compares and comparethemarket.com. So yeah, these account for 4% of the 2,500 sample. But what was interesting here, which I thought was interesting, is also now mortgage quote aggregators are on the scene now. So in the traditional practice, insurance brokers work. Okay, yeah, there is the traditional practice is the insurance broker, the middleman. Is someone who works directly between customers and insurance companies. In certain changed circumstances, the quote aggregators automate that should be the middleman. Now, an example of a mortgage aggregator is Habito. Now they're both a lender and a mortgage broker, but you can go on their site and they can search across 90 separate lenders. There's no customer fee. You don't pay them because they get they get paid by I don't know what the term is, but basically by one of these separate lenders. Nifty features. It shows you can the likelihood that you will be eligible for a mortgage. And so and they've raised just over 80 million pounds. Now, I had read about them early in the year, and that was because they had released on the Facebook, it's a very cool chatbot interface, and so that I'll be quite interested in use it, because I must admit I generally find them really annoying. But this one, by all accounts, it's got some really good reviews, and so a lot of the what would happen in the kind of the broker interview, that's all covered by the chatbot, now, and then the more sort of, I would say that there's a whole bunch of techniques there, but the sort of there's some more traditional machine learning in picking up and finding the best match for the customer. But yeah, that sounded quite cool. Right, finally, the last one today is the biggest, and it's WealthTech. So this covers investment and management platforms, sales and trading analysis tools, personal finance management, and crypto exchanges. This covers 37% of the 2,500 in the sample. So the traditional practice, okay, and what I've put here is that investment is the privy of the rich, and also that data and tools for trading are the privy of institutional investors or institutional traders. Now, I couldn't really think of, it's not so much one thing that's, it wasn't so much a post-crash thing, I don't think, but it was just all the sort of the developments we've seen in the technology, and also in competition. This has had the effect that there is we now have robo-advisors, which again, robo-advisors, that is, it's a platform which does portfolio optimization, and is kind of does the job of an agent for people who want to invest passively in a particular. They want to follow an index. They say they want to follow the FTSE 100 or FTSE 250, so you've got robo advisors who would say, yeah, you should choose this combination of ETFs, which cover particular indexes. Now, more recently, and certainly you would have read about this in the news, we've had the last year, we've had the last couple of years, we've had incredibly low interest rates, but over the last year, we've had lockdown, boredom, and there's been greater volatility in market, which has prompted, it's prompted a boom in retail trading, because there's there's opportunities for bigger wins, but of course, bigger losses too. I should therefore, point out that there's a distinction which is typically made between, trading and investing, and investing is those it's generally considered. It's the same kind of thing. You're kind of indirectly you're buying some form of security, but the trading is generally refers to the more short-term stuff, and but basically there's been a massive explosion in the popularity of retail trading platforms, which allow everyone to take a punt, as it were. And okay, so, but as I said, it's not just about trading, that kind of the investment side of things is generally, it refers to the more longer term stuff. Now, but there's a couple of things that caught my eye in the big list of 50 top UK fintechs, and this was a primary bid, and I think this is a really good successful example of disruption, because I'm all for opening up I suppose technology and choice to individuals more generally. Now, so what they do is they give retail investors, the individuals, access to one-off public company fundraisings or IPOs, which are initial public offerings. Now, the thing is, these which are a great, a great way. These can be great investments, but these great investments have up until recently just been cut off from the retail investor. They're only available to the institutional professional investors, so that they've they're actually it's the London Stock Exchange, I believe, who are actually one of the primary backers of primary bid, who and they've had a couple of they've raised a lot of money. I think they've been they've hit a number of companies to watch. But the interesting thing is that they're doing it not in this yes, it's a kind of it's a new platform, but it's not a general trading platform. It's trading a class of security, but it's class of security which would normally not be available to the say the retail market. All tech is used in this space. We've got all web services. We've got the machine learning for portfolio optimization, the robo advising, and we've also got machine learning for the and super fast computers for the algorithmic trading. And one of the other things that circumstances have changed is there's been this sort of opening up of the tools and data to the individuals. And in fact, you could any one of us could actually, if you could write your Python program to sort of encode your algorithmic trading strategy, and you can now get direct access to the, for example, the London Stock Exchange order book. So you can buy securities directly from the exchange without having to go through a broker. Whether that's a good thing or not, I think with all, it's a genuine, well, it is statistically likely that, as a retail investor, you will lose money trading, but it's, but in terms of just, opening up the power to the masses, I think that's one of the, that's been one of the massive changes. Okay, so we're at the end of the talk. Some common themes. So yeah, cause of change. We've seen like post crash. Well, we've got the regulatory changes that have come in, which have led to more competition, and we've also seen some opportunities afforded by improvements in tech, especially the web services and the machine learning. But how are people disrupting? Well, a common theme is the removal of the middleman, the removal of the broker, and we've also seen a greater personalization using the enormity of data that is available, and that's me done. So I hope that was okay. And it covered what some of you were hoping for. Yeah.
And I guess, James, if they want more details, then to refer to the report itself.
Absolutely, yeah. So what we'll get these slides up here, and I think there's, as I said, I've got the hyperlinks in there, which I'm hoping will be useful. Yeah, this one, the sort of, as I said, there's the final report which talks about, what we kind of, the sort of almost like the policy, just talks about the vision and plan for policy for the UK, PK. But there's also this other link here. So rather than looking at the final report, if you want it to sort of tie into what we've just been speaking about, click on this link here, which is the work done by Deloitte for the report, which is the grassroots analysis of the fintech landscape.
Okay, great. We've got a question, but just before we go to the question, James, your contact details, did you have them on the front of the presentation?
No,
so just in case.
Absolutely, this is me, James.
There you go.
Smith.
That's James. So if you are interested or follow up or have some ideas, then there you go. James at hodsmith.me.uk. It's me.
Absolutely.
Yeah. Okay. We had one question from Paul. I think let's just scroll up. Hold on, let me just go down.
I think so. In the past, banks protected our assets with very secure vaults. Oh, sorry, we've added a couple in there. In the cyber world, how well can they protect our assets
today?
Yeah. Well, I suppose all I would say, based on what we've spoken about, is that it's clearly very challenging. I suppose is it concerning, or is it is that when we look at the RegTech, is that, I mean, that's all RegTech really. This is, but what's happening is that and it clearly was problematic, but then there's kind of outsourcing therefore done to other companies to solve that problem. Does that make it better? I don't know, but it's clearly a hard thing and a hard problem.
Mm-hmm. So that whole aspect is changing then. It's
changing. I suppose it's changed because of the regulatory changes have meant that it's the banks are they they have to make it a big thing. But I can't remember what it was, an American report, and it was saying that basically all the big banks were saying, no, this is not fair. This is basically asking us to be kind of the FBI, and we and then you're not giving us the support to do this. So it's clearly and it's so yeah, there's bigger fines. What else has changed? Well, it's because of what you've just identified. It's in a digital connected, everything connected, faster world, it's harder. It's harder than keeping money in a bank.
Yes.
No, thanks, Paul.
Okay. Yeah, so it's
and so and Andrew's pointed out, he said, thanks James, very interesting. Oh, I do worry about how much the regulators understand about ML. Yeah, but there's a lot of misunderstanding about ML, machine learning, and I think in my mind, I always say to people, look, it's kind of like back at school when you're doing the the lines of best fit, straight lines, and that's all machine learning is. It's just that it gets difficult because we're not just dealing with there's 2 dimensions. It's it's potentially many thousands and hundreds of thousands of dimensions, and it's but it's drawing lines through data.
mm-hmm.
And I think if people start thinking about it actually in that term and think of it as just like drawing lines of best fit, then it can be an adequate solution to a problem, and not people, as I said, thinking on the one hand Terminator 2, or thinking it can do amazing things that actually it's not the appropriate tool. It's not the right tool for the job.
Okay, yeah. Yes, but a single point can buy. Yeah.
I suppose. The only thing is you just recognize you use. Okay, it's like if you're building a the right tools should therefore be should be appropriately robust, to use the correct term. They shouldn't they should be able to account for outliers, but of course but many tools, I put my cards on the table. I don't work in deep learning. I actually the kind of machine learning that I'm probably more interested in is works with very small amounts of data, and it's more sort of works on a sort of a probabilistic framework. But yeah, so you've got to. That's one of the problems with these big complicated models, is that you can easily get bias in there, and I think that one of the one of the challenges of using machine learning more generally is it's not machine learning, it's the problem, but the selection of training data. Absolutely, yeah, no, you're spot on. Yes, it is. What was the point? Sorry, I was going to possibly make another point, but yeah, I was agreeing with you. Yes, that is an issue. Again, I'd say it's about you have some priors. You make sure you've got some you incorporate the sort of prior knowledge. I'm just trying to speak in very general terms, but basically if there is enough enough data. Data always wins. I suppose what I mean by that is so that thinking is that obviously if there's enough data, then the kind of ideally it captures the it is an adequate model. So the thinking goes.
Okay, lovely. Thank you again, James. I think we've given it a good bash at that. It's almost just gone 8:40, so that's I think people have had a fair share of the money they paid for attending this, James.
Oh, absolutely. I would say that I've probably spoken to too long. They'll be asking, I should be giving them some money back.
Not at all. Not at all. Okay.
Well, look,
lovely. I don't know. Fan, are you still on the still
yes,
there?
I am.
I can see Fan there.
So I think
lovely.
His screen.
In the practical arrangement, James is going to provide us with the PowerPoint. We will get that loaded up on the branch website, and the recording is recorded by BCS Central. They will send the recording to some editing team to kind of do whatever they need to do to make it good, and that will go up on the BCS YouTube. And for those who have registered for the meeting, I think there's an automatic email to give people the link to that recording. And for those who are interested, of course, you have James' contact. And thank you, James, for giving us this really, sorry, the big picture of this FinTech thing, which is much wider than I have understood before. So thank you very much for that. And at some point in time, I'll have to then have a private meeting with you to see how I can get some money out of this.
Well, I as I said, I just build software. As I said, the only thing I could say is said with regards to sort of retail trading, is that according to the research, that if you're probably going to lose money.
Oh,
right. Okay. Well, at least then I need to learn how not to lose money. And thank you very much for everybody who have spent the evening with us. We look forward to seeing you in our future events. And thank you again, James. A very big round of applause
thank
Oh,
you.
this really comprehensive.
Yeah, they're all muted. But...
Well, that's right. No, it was a real pleasure, and yeah, I hope to meet some of you again when we can be face to face.
Definitely. And James, normally what we could do is we could always pencil in another session on this in a year's time, see how it's developed. So anyway, we'll see that we'll look at that next time.
Absolutely, it'll be my pleasure.
Yeah, brilliant. Okay, thanks again, James, and
Okay,
thanks to
everybody.
everyone.
So I'll close the meeting now. Enjoy the rest of the evening.